Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. In addition, it is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on this process. Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It takes a village, you might say, in order to do the work required in order to potentially establish a edge. The Trader Lab, it's an advanced trading process. What we do, it is based on structured trades that you can learn and reverse engineer. And like everything in trading, past performance is never indicative of future results. You have to do the work. However, if you're interested in the business of trading and career building, then you might want to visit the Trader Lab. And there is a link in the bottom of YouTube, and you're always welcome to the Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, if you've been following the stream, I am streaming from Costa Rica. I have an unstable internet connection. So if for any reason I have to drop out of YouTube, this stream will be posted later so you can review it if you choose to do so. But please be advised, even if you're in the Trader Lab Discord channel, that if I have issues, I will try to continue in Discord. And if you're visiting in YouTube, use the link at the bottom of YouTube if you want to visit the Trader Lab community. Now, let's get going. We have a lot to talk about. Obviously, you guys are aware that we are in a potential bear market. However, there are other elements that take place because the market, no matter what, and I can't say no matter what because under certain conditions, everything can always is unique in its own way. But in the current market condition, we are in a bear market, in my opinion. Now, bear is subject to time frame or fractals that you trade. So even though the market might overall be going down, the market does rotate on top of itself. And one of the things I advocate for, and it's just something I've found over many years of trading, and it's about 45 or almost 46 at this point, professionally and otherwise, and I've coached and mentored a lot of traders over the years. What I found is in a learning process for developing traders now, and all of us, depending on how long we've been trading, we're at different places, but I advocate for developing traders so they can get to a place where they can continue in this business versus knocking themselves out by trying to do too much too soon. So for me, what I found in educating traders is that you really need to start with a dominant side and really develop a plan that is one-sided primarily. One side means if there is a dominant side, to try to stay with the dominant side, and instead of reversing and flipping and trading both sides, that you focus on alignment with one side. And then you create a structured trade plan that has statistical probabilities. And when the conditions reverse, you usually, those conditional behaviors or reversal structures for exiting from your dominant positions, because you need to be able to recognize change in context. And it's much easier, in my opinion, and from what I've observed over the years of educating other traders, to kind of stay on one side of it and then reverse engineer what's going on and create statistical edge. Then you add more pieces. So it's a learning process. And of course, everybody's at a different place in their education. So it's not like one size fits all. But if you cannot get it from the dominant side, then you're just going to end up over trading and flip-flopping like a fish on a pier, out of the water, of course. So here's a couple statistics for you. You grab a pen and paper if you're interested in probabilities and you have to vet everything for yourself. Let's take a look at the current market condition. And remember, these are not trade recommendations. Everything you see here or anywhere, whether it's here or anyplace else, you need to be vetting for yourself. And by the way, the structured trades, and I just should mention this, look like this. There's 60 PDFs. They're available to everyone in the Bookmap Discord Trader Lab community. There's a whole, as they say, a boatload of these. I don't know why I'm thinking of fishing today, but there's a lot of these. And again, I'm not a vendor. There's no cost for this. Basically, what these are were traders were asking me many years ago what I was doing. These are actual trades, and others are screenshots. And also, I was working with Bookmap developers many years ago on ideas. Some have been, so there's research involved in some of these, and that's not material. Some of these have been, as they say, integrated into current add-ons that are available in Bookmap, and others have been thrown out the window because that's what research is about. Now, this is the RTH. This is Investor RT, higher time frame software that I use. I've been using it, I think, since 2009. I can't remember. You know, you start going back a few years and things get a little murky. This is Friday's activity. Now, let me just explain a couple of pieces here. This is called a microcomposite. All it is, very simple, is a consolidation of RTH candles. And if we draw a profile over it, what we're seeing is the distribution of volume at price. Now, most retail traders use indicators, that's fine, but they are really price specific. In the profile, it is volume specific. So how much volume takes place at a price? Because that's pretty important. The fact that the price was up here is not as important that no volume was going on up here, in my opinion. And you'll notice here there's wicks. What that was saying, there were sellers here. Now, a week ago Friday, so not last Friday, Friday before, we had our selling, and there was news that there might be flexibility on tariffs, okay? That caused a gap on Monday, and we checked the high volume in this consolidation. Now, what does high volume mean? It's the same as shopping. High volume, if you want to just use a great analogy, because we're all shoppers, so we understand shopping. If a price is too high and we come back to it, we might go, no, I'm not paying that. Now, there's no perfection. Don't you wish there was in trading? But there isn't. So up here, it turns out this is too high, and then we get the Acapulco cliff dive. This is rejected, too high. Now we come down, and then what that tells us is here, this is too high. So this is a distribution of volume, and it's made up of all the individual prices in here, and then lower, and we fall out of this. Well, when we fall out of here, where might we go? And if you follow the stream, it was here, and then locations below, and then possibly down here if we take this out. Now I'm going to show you today, and then we're going to go on to statistics, which I said, grab your pen and paper. So I just want to give you some time to get your pen and paper. Now, this is today. Now, what's interesting is, and this is something when you've been trading for a while, you see certain behaviors continuously repeated in a random fashion. Remember the term random. And what is that? Well, anybody who's sitting long and is thinking about it, when you get this on a Friday, what might they do? They might sell. So we get a gap open, lower outside of this range, and we get continuation selling. And it sets up two possibilities. One is, of course, the selling. But what happens to these sellers? And what about these sellers? The possibility sets up of a squeeze. Now, this is where the discussion from the top of the stream is, what's the trend? Well, the trend is down. However, since we trade, we're day traders, we trade both sides of the market. We trade, and the market tends to rotate over itself, because if we have sellers this morning and we run out of those sellers, then what happens to the shorts from this morning? Well, they can get squeezed. And what about these guys up here? Well, they can get squeezed, and we can fill the gap. Now, here's the statistics. Here's how you kind of start putting these ideas together. 1 second, let me get this off the screen. Well, actually, let's try it this way. And let me get back to the RTH Open. I want to show you structured trades. Now, what I do in the stream here, in case you're visiting first time or you're just kind of cruising along, is I discuss something called structured trades. And the idea of the Trader Lab is to give traders pieces or templates that instead of trying to reinvent the wheel, I've already spent, well, 45 years of manufacturing wheels. And most of those wheels over the years, which looked very promising, got thrown in the trash can because they did not have an edge. Though you would see patterns and you think, well, this thing repeats. Well, everything repeats in the market. And that is kind of our catch-22. We see patterns and we think that's possibly a trade that we should do something with. And many of us don't understand that this is a business of probabilities. So what we do is we start trading it. And it's no different than using your indicators, and you see something happen and you see it 5, 6, 8 times, whatever it is, and you just start trading it. Well, you are going to have winning trades. The problem for us is we may not have enough winning trades with a process, and we actually do not have a statistical edge. And that means in spite of the winning trades, we're going to lose dollars with it over time. The business of trading is based on statistical probabilities or edge. It's gaming. So just remember the business you're in. It might be called trading, but it's actually gaming. And the trades, if you will, or the structured trades or setups, as you think of them, are the games. The casinos only play games that have a statistical edge. In spite of the fact they could probably have other games where they win at times, but they lose over time. They're not going to play that game. So as traders, we want to play the game. That's FOMO, and we just want to be clicking that mouse. So if we don't have an edge, we're going to lose. And that's a fact. So if you don't know where your trades are that give you a positive expectancy, then you're gambling, and that might be have a great time, but you're going to put yourself, in my opinion, out of business. So we opened lower outside of yesterday's range. Let's go over these statistics very quickly. Now, there's about a 64% probability of filling the gap. There is a 67% probability of taking out the first hour's high. There is a 70% probability of checking the ETH low. There's an 85% probability of checking the ETH volume point of control, which is the highest volume from the ETH. And then there is, let me go a little further here, getting back to settlement, about 43%-ish. And getting to the previous point of control. Now, what is point of control, overnight volume point of control? Those are the highest volumes for those specific sessions. And the market or the market mechanics are that the probability is that the market will come back to high volume. Now, let's use a simple analogy, then you'll understand auction market theory. If a price is too high in the store, and let's just say they mark the price up, and there's a retail price, but nobody wants to pay it, you're either not going to pay it or you're going to leave the store and shop elsewhere. This is how the market works. It's a discovery process of valuation. And if the valuation becomes too high, think of it like you made the tuna casserole and you needed another can of tuna. You go to the store and the price is too high. Some are going to pay it, but the volume is going to dry up. There's not enough buyers to sustain that as a fair value. The market will reject it. So we can use these structures or an understanding of being a good shopper of how the market works. So if we find too high and reject it, we can get a counter rotation, or let's just say a selling event. If we find too low, and now you go to the store and the price is on sale, you throw 3 cans of tuna in the cart because you're a tuna lover. and the price doesn't stay on sale in the store, it comes back to retail. This creates our rotations, and this happens in all fractals or time frames. I hope you guys are with me on this. Please let me know if you're in the Bookmap Discord Trader Lab community. How's the audio and the screen? And how about in YouTube? You guys doing okay? And please give a like if you're in YouTube. I don't see anything posted in YouTube. Are we doing okay over there? Can I get a check in YouTube here, since I don't have anything in there? And please give a like if you're in YouTube. Thanks, Dan, and good morning, Dan. Okay, guys, let's continue. So, RTH open. Now, what do we anticipate? Let's remember, continuation selling, and levels are open down below that have statistical probabilities, and the possibility then of a squeeze at some point. Now, there's a few ways you can use this. Now, remember, my primary objective is to help developing traders learn the business of trading. And this is advanced, but it doesn't have to be complicated. But understanding market mechanics is an advanced concept because it's very easy for us to get one-dimensional. Now, I'm bearish on the market. Interesting, isn't it? But if I'm bearish on the market, it has nothing to do with what I do as a day trader, but it has a lot to do as an educator. So I just want you to understand that. I advocate for traders learning how to trade. Everything can be added, but if you don't have the discipline to learn process and to recognize change, then that's going to be a problem, in my opinion, at least from the experience I've had over the years working with other traders. When I sat on the trade desk, I would spend a lot of time with the traders I work with, and to me, what I found was the psychological aspects of this business, like the hurry, when you see the market running up, down, or wherever it's going, if you don't have the discipline to wait for your trades, you will not stay in the business. And that I found very frustrating because I saw over the years what I thought were very promising traders who could not control themselves. That might be the more difficult element. So here's the RTH open. Now here's what I'm going to be talking about here. I'm going to share structured trades with you that are available to everyone in the Bookmap Discord Trader Lab community. And if you're visiting in YouTube, you can use the link down there. There's no cost to visit and participate. So I'm going to talk about these trades. I'm also going to show you some advanced ideas and everything you need to vet for yourself. So let's get going. This is the RTH open. Now let's remember the condition of the market. The market is short from Friday. We have a gap. RTH open is here. And let's come back. Where's yesterday's low? Friday's low, I mean. It is here. So the possibility is fill the gap, okay, right here. So that's one piece. However, let's go back to the original premise. If you're an investor or whatever, pick one, and you read the news over the weekend about how the market lost, all this selling took place. What are you going to do? You're going to get out Monday morning. This is typical behavior. And the other part is those who want to get short will get short. So that sets up what? The market is short from Friday. The market gets short this morning, and that sets up continuation selling in the morning and then a possible squeeze. And we see this all the time, by the way. And you don't have to be in Trader Lab to see this, but if you don't understand not only market mechanics, but human behavior, if you will, then you're missing an opportunity. So now remember, I advocate that developing traders trade from one side. It's not the way a more experienced trader will trade, but a developing trader needs to be trading from a primary side so they can learn market mechanics. So let's look. First trade. This is called the developing volume point of control. By the way, if you have questions, please post them. Okay, by the way, if you're in Discord and the audio is a little flaky. You can continue watching in YouTube. The other part of it is that you might want to disengage and then re-engage in Discord. Sometimes it has to do with that also. I mean, it could be anything really. Remember, guys, I am streaming from Costa Rica on a poor infrastructure. If I have to drop out, this stream will be posted in YouTube later on. So, developing volume point of control. The yellow line's the highest volume. It starts at 0 at RTH open. A sell sweep, often, and it's there too, right before RTH open, can suggest a rotation up. There's nothing mechanical in order flow. These are just detectors of behavior. The market comes up. I've got my sellers here. Now, full session VWAP is actually at the time, I think, up around here. And because not all of this is accurate because of when I start Bookmap. So, but they're pretty close. Now, right here, this green boxes are absorption. So, and let's not get carried away about icebergs because we don't know their agenda or time frame or anything else, right? 563 buying icebergs here. That's why you're seeing the absorption. So we get our sellers here. Now, here's an interesting thing about icebergs, and I don't have time to cover this, but a lot of this is discussed on a regular basis in the Trader Lab by our traders, as well as the data mining on those statistics I gave you. There's a lot going on in the Trader Lab, a lot of contributions. It takes a team to do this. So, selling iceberg, buy stops, VPOC migration. This is the new retail price. Now remember, retail price, if it's too high, we can come back. And of course, if this is too low, this is called developing volume point of control. And I made up a term for this progression. I call them a variable high volume node. I made this stuff up many years. When I say many years ago, because I observed phenomena, and at first, because I learned traditional market profile way back from the guy who created it, Peter Stottlemyre, at the CBOT, this didn't make sense. You know, this wasn't part of that. And early on, I was in and I forget what it was actually, but I was with other traders who were doing market profile, and I started talking about this, and I got tremendous pushback. You know, like, and you know what I'm talking about, rigidity versus curiosity. So I'm curious. So I was saying, well, what does it mean? What does it mean? So what it means is, this is the shopping experience, and if this becomes too high, we can come back here. So let's watch. Too low? Too low? And what is it saying? Because this accelerated, the market didn't spend any time. So here it spent a little time, but notice this acceleration where the volume has to catch up with it for this yellow line to move. So at the moment, this is the highest volume in the developing time frame. So let's go take a look. So right here, and now here's the possibilities. Let's look at the possibilities. If this is too low still, we can push off. Okay, you see what it does? Here, if this is too low, we can push off. What does it do? It goes the opposite way. What does that say? Let's talk the language of the market. I don't use indicators. Doesn't mean you can't. But I just interpret a language. So think of this like a musical instrument or that you play. You have to learn to read music, or a foreign language. So I try to stay in the language part because my brain is better so far than any indicator or even AI so far, right? So I can process this in real time, whereas most things cannot so far, right? So I break down, it says maybe this is too high, and this was the last place it was too low. Let's look at the behavior. Notice the behavior. Isn't that interesting? This is kind of what I started seeing many years ago and going, why did that happen? I mean, don't you ever ask yourself why? I ask myself why. Now, I ask myself why on so many things it took me years, because I'd ask myself why, and then I'd reverse engineer it and work on it. And this stuff takes years, by the way, and I'd throw it away. But think about yourself. How many times you get excited about what you think you see? Because our minds are geared for pattern recognition, so we see stuff everywhere. But if it doesn't have an edge, in spite of it working on a random basis, you're still going to lose. Most traders are in a hurry to trade. They don't take the time to know where they should trade and what is not. So, too low, there's the support. Too high, resistance. And what are we looking for? Continuation. Early. Watch. VPOC migration. I posted this in TraderLab. Now, advanced traders might sell this. But let's remember, this stream's for developing traders. So you don't need to be doing anything. You need to learn how to trade. Everything can come after you learn. Once you understand what's going on, you'll start, and you're in TraderLab, you'll start seeing advanced processes. And I share those, as do other traders. It's not about me. I'm just doing it longer than you guys, that's all. So I've had the opportunity to make more mistakes, waste more time. And early on, I thought it was about confirmation and looking for certainty. I didn't understand there is none in this business. What there is in this business are probabilities. Same as the casinos. They only play games that give them an edge. So this is called VPOC migration. I did a specific webinar on it. It's in the library in the TraderLab if you're inclined. How we doing? Okay, so this is called VPOC migration. This is a structured trade in TraderLab. So subject to your experience, you could be short here. We're going to leave the one up on top out. That's different. You could be short here. These are structured trades in TraderLab. You'd be short here. So all these are shorts in TraderLab structured trades. Now let's watch. So this is not a bad way to start your morning if you've vetted it. And of course, you could always take stops. Let's not forget what we're doing here. This is a target, ETH low, and this naked volume point of control. Now, let me give you the statistic again. Past performance not indicative of future results. Lost it. Lost the statistic. Almost a 71% probability we're going to get here. And this has a high probability. This was a retail price last time we were down here. So these are targets. Now, and I'm going to go into something a little more advanced. This is a sell sweep in alignment with the target. What might that do? Well, subject to your trade plan, you'd be out of this trade. So if you're in TraderLab and you're a developing trader, you would know where your trade is before it shows up. You would know that continuation selling is probable after Friday's Acapulco cliff dive. So if you took your short here, which is the last place to take it, by last I mean of all these other possible entries, if you're a developing trader, you'd be in here 65, to 50-ish, okay, 51. So not so bad, a 15-point trade. Will you guys be all right with that? Now, let's look at 60 and past performance not indicative of future results. Look at 60. 60, sweep, possible short here. Let's see what it does. VPOC migration, too high. So what is this? Now I'm integrating another piece in here, liquidity. This is the heat map. So, and these are structured trades and they're more advanced. But what we have right here is, once I come down here and get primary targets, the sweep suggests a counter rotation. I now have mid and VWAP and I have this liquidity. If you want to learn about this, and this is where order flow can really help you, come to TraderLab. You can pick up some of these ideas and then you have to vet them. There's my sweep. That's a buy sweep. Look at the difference here. Sell sweep, north, buy sweep, south. Location, liquidity. Where's the alignment? Mid and VWAP, sweep, Trigger, this is a structured trigger, short, VPOC migration. Let's watch. Watch here. Now, I've been posting lately in the Trader Lab for traders, and it's, remember, Trader Lab is, our senior trader has over 50 years, and then we have new trade. It doesn't matter, how long you've been trading. What does matter is that you learn, and you're going to see phenomena, and especially when you see order flow phenomena. And the thing about order flow and everything in trading is it's always random. So right here, we have an interaction. Sellers are here, buyers are here. This resting liquidity. Typically, we see icebergs absorbing. So we get a reaction. Now, watch. So when I see this, I'm going just like you would. What's going on? You ever do that? What's going on? What I know is right here, and let's come back over here. The buyers were here. Watch. Now, I always say, look left. Support becomes resistance. How about that? So, interaction here with the liquidity. It's called the heat map. Break low, break high. Resistance, resistance, resistance. Trigger. Now, this is support. I get absorption here. Let's see what it does. Resistance, resistance. Now this, I'm moving into something a little more advanced. I just want to show you, this is an advanced process, but here's where here, it's resistance. But what's a trigger? Well, if you're advanced, you could sell this. This is a trigger. If you are still developing, any of these are viable, and all of them you can take stops. Right here, I have a buyer right in alignment. I break under the liquidity. This is a triggering structure. And again, I can't spend much time. And this is not for developing traders. This is for traders who already understand other pieces of this. Something called context. This is a trigger. All these are entries for shorts. Now, and the target down here is this, okay? 29, and we did not get there, which doesn't mean anything. It's just the way it is. Now, in Trader Lab, a number of traders got long because they saw the reversal. Now, I'm going to show you something else. And I don't discuss the counter trend trades as an educator. I discuss the trend trades. And I purposely try to stay away from. Now, if we're in a balanced market, which means just rotational around the volume or mean reversion trading, that's different. But I primarily focus on one direction for developing traders, because you don't need both if you have range. And if you can't understand one side, you will not learn the other side. So this is our retail price. VPOC migration. Now remember what happened before with the VPOC migration. We were using it to short. So right here, we have the new retail price. Now remember, if the price is too high, we're going to bounce off it. If the price is too low, we can bounce off going in the other direction. Now, this sets up a counter trend trade. Now, again, I don't talk about them much in Trader Lab. And our resistance is going to be here. Notice the reaction here, here, here. Support. So here's what you get. VPOC migration, bounce to here. And if you're in Trader Lab, you should be screenshotting these things. Resistance, support. Resistance, support. You break this way, then you have the possibility for a squeeze. Let's watch it. What? Whoops. Let me get this in here. Forgot. Now at this point, For me, if I'm only trading one side, I'm not trading anything here. I'm using the counter rotations to look for continuation shorts because I want to stay in alignment. But I also have probabilities or statistics that say I could go higher. Remember, I gave them to you at the top of the stream. So variable high volume node. Let me mark these again. Wow, it's getting warm here in Costa Rica. Okay. Too low, new retail price. Too high. Look at the behavior. Too high. Variable high volume node shifts down. So too high, what's this? Potentially too low. It has to clear this to go higher right here. This. Break high, it clears. Let's keep going. Now, as we come across, we now have our shorts in the market and we have the potential to squeeze. So let's just keep going here. Well, let's just look at some behavior here. You notice how this comes in the book here? And it acts like an obstacle. And you get a counter rotation here. You can learn about using order flow. So what do you do with this? Well, if you're long, one of the things you might do is you see this, you can target it. The ETH mid has a high probability, by the way. Let me just get, I don't think I gave that one to you. About a 68% probability. Notice where this shows up. ETH mid. Now, there's another piece here. At 9 a.m. Central Time, which is here, we have something called, in the first half hour, wherever the high is, it's called the IB 30, IB high 30. There's a high probability if we take out the IB high 30 that will take out the first hour's high, which is going to be up here. And at the time, we don't know where it's going to be. So let's watch the behavior. This is the first hour's high. So now I have a couple other structured trades. Okay. So let's go take a look. So up here, so liquidity is here, bounce off, come back here. This is our retail price. If this is too low, we can come back. And we have a high probability, remember, top of the stream, of taking out the first hour's high. 67% probability. Doesn't mean it has to, doesn't mean it will, doesn't mean anything. It just is what it is. And we have another trade that might set up here, and we'll go into it in just a moment. So let's watch. Now, remember, high probability we take this out at some point, and high probability we get here and here. Overnight volume point of control, and you have to vet these for yourself. 85%-ish probability. And what else was there? Naked volume point of control. And that one is about 32% probability, but look where it is. So this and this are the same. So this is the one with an 85% probability. So I can't, this one, this is what I'm interested in. So let's watch. This, by the way, was very interesting here, VWAP, because I saw the selling here, and I know I have a high probability up there. So when I was looking at this, and we have a structured trade in Trader Lab called VWAP the VPOC, and so that would be a long. Now, when I was looking at this, I'm saying, I don't think so. So and I'm only talking about me, it is a structured trade, but for me, when I saw this behavior, now right here, this looks like a good trade. I've got liquidity, I've got sell stops coming out, and this is the retail price. Remember, the yellow line's the highest volume. The structured trade is called VWAP to VPOC. But I was looking at it and I said, well, this is interesting. And then this pulls. So this, to me, is, I said, wow, we can come out down here now. That's what I was kind of thinking might happen. Remember, I don't say will happen. It's might happen. We come back to the VWAP and there's absorption. And we get the rotation. But I'm having a hard time here. I'm seeing this and I'm going, wow, why aren't we getting up here? You know? So I was thinking this is really important because this looks like it's the kind of like the moment of decision on this thing. And then we hold the VWAP, no clue, by the way. And then we finally, our buyers take control here. But right here, I think it was kind of like up for grabs, really. And you know, a lot of algos and all use the VWAP. It's all common knowledge. So once we break up, then it suggests north. And we have that high probability stat, remember? So this would be a good long. It is not one I would take because of, I just wouldn't take it. Doesn't matter to me, you know. But it is a structured trade. I don't worry too much about this stuff. I just take the trade that makes sense to me. Now, there's another trade here called the IBF or IB failure. It is a potential short. Now, this is something where time frame or fractal is important. So in my process or thought process, I look at this like, well, the dominant side is the downside, and the current side that's getting squeezed is the short side. So I can trade it from either side. So in the Trader Lab, here's another structured trade for you. Let's take a look at it. Liquidity is here. Get through it. First hour's high. This is called range extension. I see right here the seller was absorbed. I don't normally put the absorption detector on here, but I thought I'd put it on here today just to show you something a little different. IB trigger. This sets up a short, and it's called the IBF. Now, subject to your time frame, and it's not really time, it's really more behavioral or participant-based. This is a short, and the goal would be to come here. It's called mean reversion, or it's nothing. You know, it's up to your plan. So this is a structured trade right here called the IBF, and it's a called mean reversion trade. So let's just look at it. Notice where we're coming. We're coming back to the IB. It's still a short from here, trying to go here. And, you know, like everything, it either does or it doesn't. It does whatever it's going to do. Okay? So this trade, you'd be risk neutral if you took the IBF and you're trying to come here. Mean reversion. What happens here? Our buyers are here, which who knows? So what's up here? Liquidity comes back in the book. And it was pretty much a pretty good struggle here. We break low between the IB, under the IB again. It sets up another IBF. We have a sweep here into the liquidity that's resting here. Okay? The passive side. So let's just look at the behavior. Notice how the liquidity comes back in the book. So these are valid trades for me. And it doesn't mean that the market won't go higher because nobody can answer that one. So notice the aggressor. So this here is really interesting, I found, because it was a fight, a real fight between the buyers and the sellers. And don't forget, statistically, and statistics don't mean it will do anything. It's just maybe. This has about an 85% probability, and you have to vet that for yourself. But in the short term, sellers, IB, potential short, still trying to come down here. The buyers were here, and this is the target. This is the same trade as this, this, this. These are all shorts if that's your plan. Now, what do we get here? VPOC migration. What have you noticed previously when we have VPOC migration? Well, either we can push off this way or push off this way. So right here is like what we call the moment of truth. If the volume is moving higher and the price is moving higher, then that says maybe too low. Now, we don't know. Right here, this shifts up. It could do this. If it shifts up and we push this way, then it says potentially we're going to come out the top. Let's go look. And where's our next level? It's right there. Okay? Are you guys with me so far? By the way, do you have questions? Post them. I'll do my best. I'm going to come up for some oxygen. Okay, how are we doing in YouTube? Please give a like, support the stream, encourages me to continue, and you to have access to this stream and the Trader Lab community. Coach Chris, I'm not sure what you're asking. 5,500 naked volume point of control. I'm not sure what you're referring to there. So VPOC migration, I did a webinar on this if you're interested in what it means, how to use it. Think of it this way, shopping, and if there's more volume here, then it's a retail price. If it becomes too low and now the high volume is here, same as your store, the buyers are willing to pay it. This might be too low. And so are all the other price points until we find too high, wherever that might be, part of the joy. Too low, notice where the support is. Next target. This is the same as this. This is developing, and this was the highest volume from the ETH. Depending on how you trade or manage your trade, this is a target. Liquidity comes in, and it has over 80%, almost 85% probability. And when we get here, what do we see? Let's go take a look. This right here, subject to your skill and vetted trade plan. Right here, we have liquidity, we have absorption, and this sets up a potential counter rotation. Now, I'm not suggesting anybody should do this. I'm just showing you trades that you can vet. This might not be your trade, but if you're only on the long side because of the squeeze, then you would exit maybe here and not think about it. Or if you trade both sides and you're more advanced, this is a short back to here. And for me, 10 points, doable. Or let me give you, see, I'm giving you a bunch of ors because you could do any of this. Or you see this, you exit your long, and you are looking for continuation longs because we have a probability of filling the gap. You see? So in a trade plan, you would go, well, I can take a short here to here, or I can use the short for this. See? Now, you can't ask me what the right thing to do is because my right thing might be different than yours. So the right thing is based on probabilities and whatever side it is you want to trade from. You can trade from both sides, one side, doesn't matter. Okay? Target, target, target. Right here, liquidity in the book, and again, potentially here, right? Now, right here, support, and down here, support. I got to label it. Let me just get this done. So when you see all this, and it probably looks like pandemonium to you, what really is going on is we are reading the auction and we're combining it with order flow. But the most important piece to this is knowing where your trades are way in advance. not what will happen, where it might happen. Because mentally, you need to be prepared. It isn't like, what should I do here? It's like, where do I have a statistical probability, which is almost 85% to get there? And then what do I see coming in at this location? I see the heat map, as it's called, which is the passive sellers, the limit order book. And I come up here and I have 1,600 selling icebergs. Do you think that might be material? Break, pull back, test. Now, where's the target? There. Or, let me give you the other side of this. Or, if you still think we're going to go and fill the gap, you're going to be looking for longs. And at either one, there isn't a right or wrong. It's about edge. So that's all I can tell you about this. I don't think too much about it. I just kind of do my thing, and my thing probably will be different than yours. What happens up here? Buy sweep, liquidity resting in the book. Once again, order flow, sweep. Right here, potential counter rotation. Let's see what it does. And this is where you're looking to go. You're looking to fill the gap. Now, here's the question for you. And what was getting to yesterday's low to fill the gap? I think it's about 64, 65% past performance, not indicative of result. Well, if I'm trading a 64% probability, 65 to get here, here's the question for you. Do you sell this? Or do you just manage your trade? So let's see what it does. You could do either, by the way, because it has to be vetted. You see the behavior? You should be screenshotting this. If you're in Trader Lab, and I do post regularly in Trader Lab, and look over here, down here. So what you have is, this is rotational trading. In other words, this is advanced. So this is not really primary. This is ancillary. This is for advanced trader development. I do share these, but it's not necessary. The idea of developing as a trader is to actually survive the learning curve. You don't need to be trading these, but I like to show you behavior and how you integrate order flow. So that's why you see this to this, which is down to here. You see this, which is against this, which is support, and we get our statistic. Close. We still have this statistic open. So your choice is do nothing, manage the trade, or you see this, exit, and I'm giving you all the yours because that's your choice. But how do you know about the choices to make? All the decisions are made outside of trading hours. All you do is bring your plan here and just follow your plan. Because the plan, if you do the work and you prepare to be in a business actually and not play a video game, you already know what you'll do when it shows up. You don't know the outcome. I mean, the casinos just play the games the same way. They don't know the outcome either. So if they can't figure it out, you won't either. So the only way to survive and sustain a potential career here is to accept you don't know what will happen. You're never going to achieve certainty because it doesn't exist in this business. What you can achieve is probability. That's what Trader Lab is based on, helping you understand the business you want to be in. Not fantasy, kind of the reality. So, too high, counter rotation. This could be a short if it's in your plan or not. So let's watch. And remember, we're looking to fill the gap, right? So sellers are here, and the sellers come back in over here. Let's watch. Now, the fact that there's sellers doesn't mean that we're not going to take them out. So let's look here. We get through this. We fill the gap. And what comes in over here? Let's just watch some of this order flow phenomenon. Now, one of the things I always think about is why? Why did this come in here? Why did this come over here? What are they doing? Well, they're passive sellers, so potentially they are selling. Why do we react here? Why do we react here? These guys add 100 in over here. And then why do we go through it? I mean, I can't give you the answer why, but I know if I'm using order flow and now I see a sweep, I know it's possible right here. Often what I see, and you have to reverse engineer these things and actually study them and research them. If I see liquidity, and it doesn't mean, because look, I have liquidity here. If I break above it, break below it, often that can be a short. Doesn't do it here. That's the part of the randomness, the joy of inconsistency. What's inconsistent in our business is the randomness of the rotations and the participant behavior. There's no predictability. And if you know how to predict what's going to happen, and I've noticed over the years there are certain traders who only pipe up about knowing what was going to happen after the fact. I wish I knew what was going to happen. It'd make life more consistent in a random environment. So we have our icebergs here. That's these guys. Okay, so selling, sweep, right here sets up, and this is the key piece right here. That's another key piece, a buy sweep. And we filled the gap and no way to know. So let's look. This is an advanced process. This could be a short if you understand what's going on. Not saying it is, I'm saying it could be. Right here's the trigger. Break. You have all these components in place from order flow. And the resistance, I'm going to draw you a little something here. Now, when I'm saying it's a short, it doesn't have to be a short. It could be nothing. It could just be, that's interesting. Let me screenshot it and let me come back and research this. Phenomena. Order flow phenomena. Now, right here, when it breaks above this, I think, now what I think has nothing to do because I don't know. Do you know? I don't know. So what I know is, I know this was a good probability. After this, I don't know anything. Sweep, I know that's a possibility of a counter rotation. And until it happens, it hasn't. Break, liquidity, sweep, going to the moon, looking for a trigger. I'm going to show you microstructure now. Just going to open this up for you so you can get a little sense of what you might glean from a high-tier order flow tool. Just an idea, nothing more. Watch. I have to open it up. Now, you can get down to milliseconds with Bookmap. Now, I don't go that far. I don't need it. Right here is volume. You can see that little node sticking out. Now, so when I'm looking at behavior, I'm looking at volume. Remember, all this is fractal. Now, right here, it could just keep going. Remember how I showed you VPOC migration? Market could push off, market could break down. This is a fractal. This high volume operates the same way. Right here, now I can't do anything with this. I just want you to know, I can't do anything with that. By the time I even notice it, the market might be away from it. So it can do that or do that. So we get this with the sweep, and I have this pulled, so it doesn't matter. This is what matters. I get below it. I have my sweep. Now I'm going to look at the next layer down of volume, which is here. I'm going to draw a little line. Same thing, just fractal. By the way, how do we describe fractals? I think an easy way to think about it is Russian dolls, Matryoshka dolls. So I'm going to draw another little line. I'm now going to draw a little box. And it could be out here, it doesn't matter. Here, a little rectangle. This is a consolidation, as you guys think of it. And let me describe it to you. This is not complicated. I find for developing traders, the reason I draw these things is that you need to develop a pattern recognition. So this is a pattern or consolidation. This guy was absorbed. There's the sweep. Thanks for playing. Broker sends you a gift basket, 122 stops. Who knows? Iceberg is here. This was absorption. Now, I don't know it's absorption until I get below it here. Sellers are under that volume, and now they're under this volume. This is a trigger. This is the volume. So the volume is there and now here. I have more volume here than I have there. That is suggesting this might be too high. And if I break under here, This is too high. And what else? The buyers are here. The buyers are there. The sellers are up here. So I now have kind of the boundaries of it. So if I can break below, I can get short here, but a stop over here. If I break inside and I get below here, I might, subject to having a vetted plan, take a short in here with a stop over here. Either one is valid for developing traders. This is a good place to start. And it's so you develop the recognition of the structures. Now you have the same thing over here. So it doesn't mean you're not going to take stops. We all do. So, but here's the thing. If you drew that box over here, this would be the outside. It never came below here, you see? So you wouldn't have a structure here. Here you have nothing until it breaks below here. So let's just see what it does. Watch. The way this works is, and you have to vet this for yourself, about a three ticks above here for your stop, and you have your trigger here, and it runs up. So the idea is you get a trigger, you'd be looking for a short in here, and your stop would have to be over this high, three ticks. You would not be stopped out. Your teeth would shatter. Mine do also. And again, the buyers are here. This guy was absorbed. The buyers are still there. You see them? The buyers are here. Resistance now is here, of course there, and here. Break. Let me draw this out for you a little bit. I'm not going to spend time on this. I just want you to see, one, how structure can work and how you can use structure to help you define consolidations and outside edges. And then south. So this could be a short. Let's watch. Where does it come? Let me show you again. Hopefully Bookmap will allow us to have this just continue on its own. That's another short in the Trader Lab. So what do you have? Short, short, short. This is a structured trade. It's up to you, not a recommendation. Notice the short. Notice where it's coming back. This is structure. You can learn this. And I think for developing traders, this is a good way to start developing unconscious competence and discipline. And of course, you have to vet everything for yourself. So that's a short. And I don't even know. I haven't seen this stuff. I have not seen it. So there. How are we doing here? And the idea of this trade would, now you'd be risk neutral, and you'd be trying to go back here to here. And then if we get under there, down to there. So where do we go? So this trade right here, you'd get scaled. It would not get back here. And then you'd get taken out on a trailing stop. And then I have nothing else in here at the moment. Questions, guys? Now, there's a couple more trades here I should talk to you about. I'd be remiss. We have a couple structured trades. This is sort of, let's go from this side. So if we think the trend might be up at the moment in the developing time frame, and please give a like if you're visiting in YouTube, support the stream. If you're getting something from it, likes help, and it helps encourage Bookmap to continue making the Trader Lab and these streams available at no cost. So we like to do that if you find value in this. This is an advanced trading process that can be learned, but it's more about the business of trading. You can learn to trade if you understand the business you're in. Also, we all take stops because all businesses have overhead and costs of production. So we have to get over that. If you think this is a business of being right, it is not. It's a business of edge. So you only play games that have an edge, like the casinos, and you accept you are going to pay the gamblers, because they do. And I'm sure if they could have figured it out how not to do that, they would have done it. This sets up something, and this happens at 9:30. Let me go back. Let me just get back here. This is the IB, the initial balance first hour high or low. And we know there's a high probability we're going to take it out. Now, we take it out, and this sets up a couple of things. This sets up what's called the IB failure, which I think I narrated here, and that's to come back here. We got VPOC migration. We either break this way or this way. You break high, that trade has a problem. Okay? Now we come back here. This is your support. You have the possibility of a long on VPOC migration for continuation up to an 85% probability, and you have the gap. Okay, we talked about that trade, I believe. I don't remember. And then you have the possibility of what's called mean reversion, which comes back here and to here. So this short would either be a short to there or a short to get long for a continuation trade. These are the possibilities. That's where, so this is a long. So this could be a short, this could be a long. Subject to what your perception is, you could be using the shorts for exits, using the longs for initiation to come back and fill the gap. I think I talked about that, but I did forget to mention some of these trades. We come up here, and remember, we did not fill the gap. There's going to be stops up here, so you don't want to step in front of this. This is a short-term counter-rotation structure. It has everything except the location, okay? So there would be nothing to do here except manage your trade, come back to the last place, which is here. Let's watch the behavior. Remember what's here. That, this. Let's watch it. Some of these are advanced. Some of these are bread and butter, as I like to think of them. And in trader N, this sets this up. Counter rotation. Intersection of liquidity, sweep, trigger, check, counter rotation. Last place we had our buyers active was here. Look where we come back in. The buyers took control, more advanced. Liquidity in the book. We have to see what happens when we come back here. Could be a target coming down. That's about it, really. This can be a long structure. It's not a recommendation. We have our sell sweep into what was resistance becomes support here and here. Let's see what it does. Not a trade recommendation. These are just ways you can use this. And everybody does their own thing in TraderLab. There are traders who are going to be taking shorts here. There's other traders waiting for this to go long. Everybody does their own thing. But the idea of TraderLab is to give you trader education so you can build out a plan. And you need to start with a fundamental understanding of market mechanics and build discipline and statistical probabilities. Let me take a look at this. This is the current RTH candle. This is Friday. We're doing a little squeeze going on here, which is all fine. Let's go take a look at this. The possibility now is to come up here at 56. Not sure where that price is. 24. So it's possible we come back here. 56.24, not a trade recommendation. So why is that? What is that? The highest volume price, and here's settlement, is at 24. So we have the potential to come up to 24 and to check the settlement. All these are possible. Get in the range. This was the retail price, our highest volume from Friday. If we find too low, we can come back and check what was too high. So this is the next possible target. And again, it's not a recommendation because it's all random. But if you're trading the long side, and this now is your support, which also sets up a potential long, this is advanced, this, against this. This is a long, this is a long, this is the target. And when I say it's a long if you vetted it and it's part of your trade plan. These are discussed in Trader Lab, but like everything, I do kind of try to focus on helping traders survive the learning curve, and then you can add pieces. You can create structured trades, as many as you want, but you need to the part of the learning process is to build foundation and prove to yourself that you can do this. And that means developing a template or a priority of inputs, and then learning to recognize change and having it defined. Conditional processes. When I built trading systems, they were conditional. If this, then that. If not, then what? So it's like branch logic. So in our minds, you might say you need to be in alignment with the condition of the market. What's the condition of the market? Well, we're squeezing. All right. So what do? Well, if we think the market is still going up, which it is, and we have our structured longs over here, or we can take counter trend trades, depending how you define trend. You can do whatever you want to do. You just have to know that whenever you interact with the market, that you have an edge. So I can trade either side, you can trade either side, but when you're developing, it's not about being active. It's being educated so you can define conditions, and then the structured trades you have developed and vetted are in alignment with that condition. So sometimes certain trades are qualified and other times they're not. That's why one size doesn't fit all, and trading is not mechanical. Because if it was mechanical, we'd all just do the same thing over and over, and we'd have an ATM in the basement, if that was the case. It's not. So what we have to do is recognize change, and we also have to recognize when a trade is qualified and when it's not. And we also have to have triggering structures and parameters of where we need for range in order to get risk neutral, because risk management's number one, really. And then either you get scaled and you're risk neutral, or you're going to take a stop. Or you're going to get scaled, get risk neutral, and then you're going to scratch the trade. This is the area of support. Let's see what it does on this pullback. And it's not a trade recommendation. So at the moment, there's no shorts for me. There's only long continuation trades or nothing. So let's watch. See what it does in here. You guys have questions. Why don't you post them in the meantime while we're waiting for this to ferment? Quaddle Hermano? Yeah, okay. How we doing in YouTube? Please give a like, support the channel. Encourages me to do this. There is no cost. And it encourages Bookmap to continue making this available at no cost. By the way, there's a lot of additional education in the Bookmap server if you haven't checked it out. Large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, swing trading, a lot more. Also, in the Bookmap server, there is the Bookmap Academy, where you can get mentoring, coaching as you work on your trades. have other traders that are successful give you some input, some insights. That's also available at no cost. If you haven't gotten your hands on Bookmap, I will say there's a free digital version. You can access all of this in the link in the bottom of YouTube. The digital version, I believe, allows you to basically play around with it a little bit. And I personally have not used it since I started with Bookmap in 2015, so I never personally used the digital version, but I think the idea, if you can get your hands on this at no cost, is probably a good thing. So you can access all of that, including the Trader Lab, which is a community of like-minded traders that have come together. Trader Lab, we do data mining, statistical analysis, share setups or structured trades. What I have shared, there's 60 PDFs of structured trades, and I'm not a vendor. The idea of this is I took what I thought was really primal processes that you can get your hands on and reverse engineer, and then you can vet them and then find if you can use them as templates. To understand trading, it's process. So once you understand process, it gives you the ability, and I'm not saying it'll work for you because you have to actually do the work. And many retail traders really jump from chat to chat, and special indicator or whatever it is, looking for certainty and for somebody else to actually do the work for them. I would say for the most part that doesn't work, and if you've been doing that, your results will speak to you. The idea is whatever process you use, whether it's going to different chats or watching things out on Instagram or YouTube, if you keep having the same experience, you're going to have the experience I had, which is Trader Groundhog Day, working hard, waking up in the same place. And if that happens to you or is happening to you, then you might want to step back and reflect on what you're doing. There is no secret sauce. I mean, wouldn't it be nice if there was that one thing to unlock the keys to the kingdom? The Holy Grail doesn't exist. Everything that's out in the retail space has been gone through with a fine-tooth comb by everybody who's walked in your shoes. So we have to, I think, stop looking for the secret sauce or the magic combination of time frames and indicators. Everybody's done it. And most of those retail traders are not in the business. They all do the same thing. The fact that it's in a software package doesn't mean you can create an edge with it. And most retail traders think more creates more certainty. It's actually the opposite. It's how can you make a decision when you have conflict in a market that's 100% random? Instead of solving for certainty, maybe, and this was kind of went off in my head, unfortunately, too many years after a lot of work and dead ends, Trader Groundhog Day, was solve for an environment of 100% uncertainty. If you don't have certainty, how can you create it if the environment is 100% uncertain? Maybe, and this is maybe the most important element I can share with you, solve for uncertainty. Don't try to create certainty where it doesn't exist. Try to create an environment of probability in uncertainty. And it may sound nuanced, but it's quite different from trying to create certainty. And the other term in your head, if you say, I'm looking for confirmation, let's use the real world. Certainty, risk avoidance. It doesn't exist here. Every business has overhead and cost of production. This is the reality of the business you want to be in, but you got to be in actually the business you're in, not in a different business that meets your psychological needs. I hope that makes sense. Please give a like in YouTube. Does this sound sensible to you? Is it logical? Might you have been trying to solve for something that you can't solve? You cannot solve to be certain. You need to be able to solve in uncertainty and now solve for probability. Probability is not certainty. At the best you have is maybe. Can you live in and operate in an environment where the best you have is maybe and a random distribution of outcomes no matter what you do? So, and now the other part is most of us as developing traders, including me, we see patterns, and our brain is wired to see patterns. We see patterns all over the place. And then we go, well, that's great. I look at that. I could have made blank number of points profit doing this. Let's start trading it. And then we go back and throw our oscillator or whatever it is over it. And we go, yeah, look at that. A little worked, you know. But the reality is that's a losing process because it has random winners, but it still loses. The casinos don't play games that lose. They play games that have an edge, and they still pay to gamblers. That's what, if you take anything away from this, even if you don't come to Trader Lab, you need to understand the business you're trying to be in. And then maybe put yourself in a situation where you change how you operate in this environment. It's not easy because we're wired to avoid risk. So, you know, our nature is to seek confirmation, and that's to meet a psychological need, which has nothing to do with the business. That's our need as humans to avoid risk. You know, whether it's out in the savannah with the saber-toothed tiger or whatever, you know. So we are wired for that, and it works pretty good, except here, because here it's all about risk. And the only way you get rewarded is by taking risk. How do you avoid risk and expect to get a reward? Isn't that kind of counterintuitive? So think about that. If you haven't thought about anything, come to Trader Lab. If you want to get educated, and it doesn't mean you'll be successful. Everybody, human nature is, just tell me what to do, give me a setup, and I'll click my mouse, and now I'm playing a game. Sorry. If you're looking for that, the Trader Lab isn't for you, because this is real trader education, and it really requires you do the work. All the work is done outside of trading hours. The way you operate in this environment is to know what you'll do when it shows up, not make it up as you go. That's a video game. Very nice, a lot of fun. Okay, this is not a video game. This is business. Notice where the support is, right? See, you can learn this. Are you interested in learning this? This is what Trader Lab is about. And this is not a trade recommendation. There's never a trade recommendation. Why would I not give you a trade recommendation? Because I take stops. I mean, who doesn't? I don't know anybody who doesn't take stops in this business, because what's a stop? It's to preserve your capital for the next trade. It's not right or wrong. Of course, we want to be right. Who doesn't? But we can't afford not to manage the risk to assure we're here for the next trade. That's the business you're in. Overhead and cost of production. Everybody pays, right? So, where's our next potential and not a recommendation? Here. And what's going to happen in the meantime? No clue. Okay? Do you know? Let me know. Me, I don't know. Gave up knowing. Please give a like. XAU USD. You must be having a good time if you're trading that thing. Yeah, I used to trade a lot of currency spreads early on. When I was managing dollars across a lot of asset classes, I really liked spreads. And this is before there were pairs. You actually had to trade them, buy one, sell one, and then the margin on the spreads was like 50% back in the Stone Age. And then I would flip them, in other words, I would lift legs and trade legs and stuff. So that was kind of interesting. It was very easy to over leverage trading the spreads because it was 50% of regular outright. I don't know if you guys are even familiar with that, but anyway, when I just saw that, and your XAU USD is in YouTube. Hi there. I think I've seen you visiting before. Thanks for visiting. How we doing in YouTube? And how we doing in Discord? We all doing okay? Appreciate you guys visiting the Trader Lab. By the way, remember, now this is the Trader Lab community. I'm going to just show you a little bit of what this community looks like. It's available to everyone. Use the link in the bottom of YouTube if you're inclined. Visit the Trader Lab. Perfect Pairs asking me, for developing traders, which of the structured trades in the 60 PDFs do you think is the least advanced? Interesting question. And by the way, this is the Trader Lab community. There's a lot going on in here. Charts being posted, comments. structured trades being pointed out and discussed, whatever, targeting, probabilities. So a lot. You can see there's a lot going on. Custom indicators and things that traders have created for different programs. Just a lot of stuff, Remember, I am in Costa Rica. By the way, I'm only in Costa Rica for another week. So that means things ought to improve. I'll be back in Chicago. And please give a like if you're in YouTube. So this is the, as far as your answer on the 60 PDFs, what would I start with? I think we ought to have that discussion in the Trader Lab specifically. This is what the 60 PDFs look like. These are actual trades, and there's a lot in here. Order flow phenomena. This is actual trade I have. Bracketing algo, pushes, pulls. That's like taking the lid off a pot. Market exploded. I exited right there. Part of it's luck. The other part is understanding market mechanics. You can learn this. Doesn't mean, you're going to escape overhead and costs of production. Actual trades again. And there's a lot of material in here. When I did this, it was because traders were asking me what I was doing. I'm not, there's no specific course here. The power comes from the community, not from what I do. Really. Please give a thumb up, by the way, if you're in YouTube. And let me come back here to the Trader Lab chat, maybe. So this is what's going on in Trader Lab. Also, there's a library of webinars. And here's what I recommend you all do. Even if you just want to drop in and say hi, start with the primer webinar. This is about an hour. It's a high-level overview of what you see me do here in the stream every day. Watch this one. Meet the Trader Lab. It's an advanced trader education portal. It's the best way I can describe it. This is not romper room. It's serious traders. It's, if you're interested in the business of trading, you can learn. But doesn't mean you'll be successful, because many retail traders are looking for action, not to create a business. And they typically do not sustain themselves. The other thing is, this is an overview of an entire process. It's one of my streams I did, but I think I caught it pretty well. It's called I Planned. So it's about trade plan. Remember, all the trade plans are created outside of market orders, and you basically bring your plan to the market. And then as the market morphs or changes, you adjust your plan that you've already vetted to interact with the current developing condition of the market. And it's always changing. So it might be shorts in the morning like today, then either longs or nothing or whatever. It's all your plan. It's not mine, And there's other traders in Trader Lab. They have plans, and, you look at them and you'll go, gee, what happened? And because you find your own groove. And the groove means what rotation or fractals do you operate in? Some traders are very active. They trade both sides. Other traders trade a primary side. And, you get your points out of the market subject to your plan. You can go and get in the Barca Lounger. We have one trader in Trader Lab. His name is Rod. I always visualize him. He puts his trades on, trades for large rotations, and sits back. Goes to the gym, goes to lunch. Watch this one. I planned, I saw, I traded. Now, day trading. Why most traders using indicators fail. You might be interested in that one. And Trapped in Trader Groundhog Day. That's the one where you keep trying to, fix a process that might be defective. And you keep waking up in the same place, no matter how hard you try. That was me. Everything I talk about here in the stream is based on my experience. It's 45 years, both professionally and then out here with you. So I can talk. Why? Then they're done that. Can you get some benefit from my experience? Yes. When I started, I was in a vacuum. There were no off-floor traders. All my friends were floor traders. Something to think about. So anyway, please give that like in YouTube. Visit the Bookmap Discord Trader Lab community. There is no cost for it. Also take advantage of all the additional education in the Bookmap server, including the Bookmap Academy, which offers coaching, mentoring, and a lot of additional education. Thumb up, please, on the way out. And remember, these streams are available to Bookmap Discard Trader Lab participants to reverse engineer, screenshot, and learn the business you want to be in. Thanks again, guys. Please leave a like. It supports the stream and hopefully keeps me available to you to give you some education and share my experience. Thanks again, guys, and thanks for visiting the Trader Lab.